I'm Martin King. I'm property analyst at Edison Investment Research, and I'm joined this morning by Mark Davis, who is CEO of Primary Health Properties. Good morning, Mark.
Morning, Martin. Nice to see you.
Thank you for coming in. Mark, PHP is characterized by its low risk, low volatility business model, generating consistent and reliable earnings and dividend growth. The half one results are no exception to this, but perhaps you could give a brief overview of what stands out for you.
Thank you, Martin. This is a solid set of results. Performance is in line with consensus and market expectations. PHP is a long income company with a very strong income security, close to 90% of our revenue paid for by the UK and Irish government. Our portfolio continues to deliver rental growth. This period was no different, with 1.8 million of organic like-for-like rental growth. This equates to 2.4% on an annualized basis. And rather encouragingly, we did see a firmer tone in this period on open market rental growth of plus 2.1% versus 1.8% last year. This is, of course, good for our future growth projections. Cost of debt remains unchanged at 3.3%, and we have taken some necessary steps to reduce our costs and our cost ratios even further during this period by around 1 million of overhead from the business that we've removed, and we'll see the benefit of this coming through in the second half, with a fully annualized benefit coming through next year. Because we're able to continue growing our income streams and we have taken out some cost, the dividend is being increased for the 28th year and remains covered. Your PHP is very proud of its dividend achievement, and management recognises the importance of a growing and covered dividend.
Mark, picking up on your point about organic rental growth, can you talk about whether the extent to which you see that continuing, but also where else you see the opportunities for further growth in the business?
Yeah, growth is a very important part of management's thinking about the business going forward. We've got this great track record behind us. Inflation is not as high as it was very recently, so we have to work extremely hard with the portfolio that we own to continue generating the rental growth and the income growth that we know is important for our shareholders. We're in a sector where our assets are in high demand. I'm sure I'll get an opportunity to comment a little later on the recent change in the political landscape. But PHP is very well placed to continue creating and developing new, modern and more flexible primary care facilities. And with the growing population that we have, the aging population that we know about, and the new government's commitment to invest billions of pounds into its primary care strategy, we think that PHP will be a beneficiary of that. As a consequence, we'll be able to capture and where possible, exploit that growth opportunity within the existing portfolio, but also be able to create new primary care facilities as well. We think the private sector will play an important part in this strategy. PHP has a market-leading position with high barriers to entry. We've got a very strong, capable and technical team here, and our asset management capability is very, very strong. We also have a very good business out in Ireland, where we have just shy of 300 million of assets. The team in Ireland is also very capable and have a skill set that we can use across our platform, not just on asset management and the creation of value, but also in a lower interest rate environment, which we all are hoping for and waiting for. We will be able to add value through our development pipeline.
And so, as well as organic rental growth in the UK market, Mark, it's asset management and Ireland where you see the most immediate opportunities. And is it still too early to think of growth from significant development activity?
No, I don't think it is too early to start thinking about growth from development activity. Alongside the government's recent announcement on its healthcare strategy, the new government has committed to building 1.5 million new homes over the next 5 years. And of course, we do know from assets that we own in places like South Kilburn and Spilsby up in Lincolnshire, that where we are seeing larger, more scalable residential developments, the government, both nationally and locally, will often demand a new primary care centre as part of the planning condition to enable that development to go ahead. So that's something that, broadly quite excites us, because we know that when new homes get built, that is an important accelerator of investment and development of modern, flexible primary care facilities. And of course, with the track record that we have, the reputation we have in the marketplace, we're already, working closely alongside some of the UK's leading house builders to bring forward these developments. And of course, we can help the planning consent come through, because there's such strong demand for these facilities, not just from a growing population, but from an aging population as well. So yeah, we are already, getting ready for that significant change that we can see coming. And South Kilburn was a leading example of that. In that particular case, we knew that our rental tone needed to be higher to justify the returns that we need to make for our shareholders. And because the local care board was so keen to allow and enable the development to take place sooner rather than later, they were prepared to invest some of their own money alongside ours. So I think we're going to see more of that. I would describe it more as a sort of partnership type approach to the development. And I think ourselves at PHP, all or most of the UK house builders and the local care boards will, ultimately join together to make more of these developments happen. So we've got the team here to do it. We've definitely got the expertise, and it's a great way for us to generate good returns, new income streams, and higher returns.
So, Mike, you talked about the change of government here in the UK, and of course, all governments have a desire to improve healthcare provision and meet that growing demographic need. But it sounds as if anything, this change of government is likely to accelerate that development. Yeah,
it's a good time to be having this meeting, because we're literally 2 or 3 weeks into the new government. I think it's fair to say that we've seen a significant shift in the political landscape, particularly when it comes to healthcare. So firstly, the government has committed to investing billions more pounds of money into primary health. Now, a lot of that money will come from hospital environments, because Wes Streeting is clearly very determined to direct investment from hospitals into community health. And of course, PHP will therefore be a significant beneficiary of that change in strategy. We've no doubt that the new Secretary of State for Health, Wes Streeting, is a pioneer for what he is calling the neighbourhood health service. And what he really means by that is he's really committed to reform of the NHS and a focus on prevention, investment into primary care, and to be able to do that efficiently and effectively, he will be working with the private sector and leading property owners such as PHP to deliver on that reform and the strategy that he has said. The government is committed to fixing all the sort of key crisis areas that we know. This is very, very topical. But it's not just waiting lists, it's mental health, it's dentistry, obesity, all of these things which can only really be tackled locally. So I think to conclude on that, we think the change of government, its strategy, the fact it's out the block so quickly on its healthcare plans is extremely positive for PHP. And, you know, primary care undeniably will be at the heart of Labour's plans for the NHS in the future, and we will confidently be a beneficiary of this. And it's a refreshing and welcomed approach.
Mark, the increase in interest rates over the last couple of years has had quite an impact on the REIT sector. Can you talk a bit about PHP's balance sheet and its funding position?
Sure. I mean, first I'd say is PHP has a good balance sheet. There's growing evidence now that valuations have and are now stabilizing. Richard, our very capable, competent CFO here, is very well on top of the capital structure. He and I've got some good ideas as to how we may, you know, reduce our cost of debt in the future. This may include, you know, a move towards more of an unsecured debt structure with the, you know, the cost benefits that come with it. Sometimes we're asked, certainly from, you know, investors or institutions that we've not met before, around our loan to value policy. Just to remind you on that, Martin, our loan to value policy is a range of 40 to 50%. This is, of course, higher than the range that you might see on other listed REITs. I myself have run another listed REIT whose LTV today, I believe, is below 30%. And I think if you're in other sectors, listed property sectors that have, dare I say, more volatility, I think that's highly appropriate. At PHP, because of our income stream, the government-backed security of that, not only have we got long income, we've got very secure income. You know, 90%, as I've often repeated, is underpinned by the government. So as a consequence of this, we set ourselves a higher policy. I feel strong conviction around that and its importance to, you know, drive efficient use of capital and strong shareholder returns. You know, we have engaged with rating agencies during the period, and we are confident that we, you know, have an extremely compelling credit rating if we were to go down that road. So put all these things together, our policy is appropriate, it's fit for purpose, our income security and longevity is an important determination of that. Of course, it's something that the board reviews frequently, but our shareholders, particularly those who've known us a long time, are very comfortable with the level of gearing in the business, and it's our job to, you know, make sure that continues.
Mark, over the last year, Primary Health has taken a secondary listing on the Johannesburg Stock Exchange. Can you talk about the thinking behind that and how it's going?
Yes, it's pretty recent, our listing on the Johannesburg Stock Exchange. At the time that we took out our secondary listing, we did not undertake any transactional activity. What I mean by that, we didn't issue any new shares. So we were really sort of starting from a standing start. We're very conscious that to have a successful listing on the JSE, we need to drive more demand for our shares. We need better liquidity, and it's something that we're working hard on right now. In fact, myself and Richard, our CFO, were down in South Africa very recently. We saw close to 20 institutional investors. As a consequence of that, we have increased our liquidity fivefold on the exchange down there, but there's a lot more to do. There's a bit of an education piece. The investors in South Africa, like the UK, they like real estate, they have a very good understanding of the market. But of course, you know, PHP is is in a niche sector. So we're just taking a bit more time to tell the story, but it is working, and we've got a growing percentage of our share register now down on the South African exchange. In the next 2 or 3 months, we'll continue to work on that. We will inevitably be back in that part of the world to see more institutions. And we do know from the work that we are doing that we'll qualify for the All P index at some point in September, which will be an important event, because that will, by definition, drive further demand and further liquidity for PHP shares. And any volatility around the technical transfer of shares listed in London down to JSE has also narrowed significantly during this period. So that's obviously a good thing for us and our potential future investors down there. So this will be a good thing for PHP as long as we can generate the investor demand that we know exists. But to do that, we need to work hard to tell the story, get the investment case across. It's something that we're doing and something that we will remain focused on.
Mark, I'm going to invite you to make a few closing remarks to provide a summary of what we've been discussing. But at the same time, I'd like to ask you, you took over as CEO in April. You took over from Harry Hyman, who founded the business all the way back in 1994. And so should investors expect any change in strategy as a result?
Yeah, really good question. I've done around 2 months now in the business. Really enjoying my time here. I think that's important to point out. I had a very good transition period with Harry, a very seamless and efficient handover. I was particularly pleased that the shareholders voted Harry in as chairman back in April when I took over as CEO, and he and I are working, very well together. So yeah, that all lays a good foundation for the future. I'm often asked about strategy because new CEO coming in is obviously an opportunity to take a good look at everything that we're doing. It's clear to me that we've got a very winning strategy. We're in a great sector. It's attractive. The barriers to entry are very, very high. We've got an unbelievable track record, not just dividend, but a track record of success and growth. We've got an excellent team here. We have all sorts of capabilities across the business, from finance to corporate, to asset management, to development, to rent reviews and beyond. There's so much that we can do here as a team to add value in the existing business, particularly as a beneficiary of the significant change in the political landscape that I've already commented on, and the billions of pounds of government investment that's going to go into primary care. So when I put all that together and I think about our strategy, and I strongly believe it is a winning strategy, I think anything that we do, around strategy be, evolutionary, not revolutionary. I'm pretty clear on that. But the landscape's changing. We've got an aging population, a growing population, change in government. There's so many things going on in and around the business, and it's our job to capture those opportunities, find new ways of growing our revenues, and continue growing the dividend, and continue generating shareholder value. So I think that's hopefully a helpful summing up, and no doubt a question that I'll be continued to be asked. But the track record here is so strong. It's my job now with the team that we have to take it on from here. But I believe I've got all the foundations and all the tools that we need. So yeah, I think with all that in mind, I'm very, very excited about the opportunity that I have.
Mark, thank you for that. It's been a fantastic journey over the first 28 years, and we look forward to following the progress.
Thanks, Martin.